Consumers are faced with price surges from the gas station to the housing market. Here with me now to talk about what the rate hike means for the economy is financial strategist Brent Wilsey. He's the president of Wilsey Asset Management. Thank you so much for being back with us here, Brent. Let's talk about these
Thank you for
interest
having me.
rates when they're raised. We know that we're hearing possibly 4 times this year. What impact is this going to have for people at home?
Well, Laverne, again, thank you for having me. But it's going to have a negative impact because what's happening, there's too much money in the economy. We got too much money chasing too few goods. That's causing the inflation on energy, food, housing, many different things. So we've got to reverse that course. And there's actually two ways the Fed does it. First off is by raising interest rates. They are saying it's going to be about 4 times this year, could be a little bit more. What I like about this, back in 2015, the Federal Reserve kind of pre-disclose what they're going to do. Powell is saying that what we're going to do is going to be data dependent. We're going to raise rates as we see what happens. So they're going to try to cool down the economy that way by raising rates. And also the other way they're doing it, people are not focusing on, is the Federal Reserve buys back securities. They have about $9 trillion on the balance sheet. They're going to start reversing that. This is going to be the last month they're going to buy treasuries and mortgage-backed securities, which what that does, it keeps rates low because it's not adjusting to the market. That's going to raise your mortgages on houses and interest rates on loans and car loans and so forth. So they're going to come at this two ways, but they're going to try to do it in a methodical fashion is what they're going to try to do.
So, if you are somebody looking at buying a home this year, what should you do?
Well, if you really need that home because you want to get a home to have raise your family, go to the same schools and so forth, it's always a good time to buy a home. But realize you're paying a high price for that home. I know that the average holding period here in California is about 5 to 7 years. If you're going to do that, this may not be the best time to buy a home because we are going to see mortgage rates increase. We could see, I think right now they're on 3.6 on an average 30-year loan. We could see those go to 4.5%. And it has been proven that when you get above 4%, it kicks a lot of people out of affordability to buy that home, which means there'll be less demand, which means housing prices could fall this year by the end of the year, maybe by 10%. So you got to be careful about buying a home this year.
Well, there are people who are criticizing Fed Chairman Jerome Powell, saying that he is not actually being aggressive enough. What are your thoughts?
Well, we will see. By December 31st, we'll see. Was he aggressive enough or not? One thing I'll give him credit for is that in our portfolio, we have gold as a hedge against inflation. Gold has not moved at all. So what that means that the gold market, the inflation market, looks like they have faith that will curtail inflation. And we can't forget about the supply chain shortage. We think that's going to be fixed by the summertime. So far, I think Mr. Powell's doing the right thing by going cautiously. He is moving forward. But the thing that you risk is that if it does get out of control, he's got to play catch up. But based on the gold market, based on what we're seeing, so far it's going to be a nice progressive increase in interest rates. I think so far he's doing a good job. We'll see as time goes on.
Brent, I actually agree with you on gold. I mean, that's something, throughout history certainly has been able to hold its value despite going down at certain points in history. I got to point out to you, U.S. natural gas futures spiked as much as 72% this afternoon, the biggest jump on record. Why do you think that is?
There's so many things going on with natural gas. I mean, one, you have cold weather back east. We know about Ukraine and how Russia is supplying Europe with their natural gas. That could destroy the whole natural gas market. And it's really could cause natural gas. And it was, I think, up to $5, I think they call it BTU, a few months ago. So it's a supply demand. And right now with cold weather in Europe, the demand is going to go up. And if the supply chain is not there, which is a problem, we have had some issues here in our country where we shut down some pipelines and so forth. That is causing a supply demand imbalance. Cold weather comes along, price of natural gas goes up.
And that means the consumer is going to pay more ultimately.
Yes, and it's a shame on that because what you always want to have is a huge supply. Then your companies get hurt because they got to lower prices. When you have a lower supply, that hurts the consumer because they're the ones that have to pay these higher prices. And the companies many times do benefit because their profits go up because their spread on what they're making is higher. So we want to have our energy companies produce a lot and do well because that does benefit the consumer.
Well, Brent, as always, we appreciate hearing your financial advice and insights. And hopefully, we won't see interest rates rise too high in the near future, although probably March, they're saying. Thank you so much, as always, for joining us. Take care.